And on the US oil, we have quite a scenario here where personally on this one, I'm already out of this trade after citing the multiple rejection of the $89 level, though we had a breakout of structure happen during the New York session yesterday, but price did not come back to do the retest of the $89 level as price continued to find lower lows and lower highs. And as a result of this, I adjusted my stop loss to somewhere right below around the $88 to 20-cent level. So we saw this lower high here, which is more or less a sign that sellers are still very strong in this market at this juncture. So if we look at what has been happening since the beginning of the week, we can see that how important the $89 level has been for sellers in this market. So at the beginning of the week, we saw the first rejection of that $89 level. I think later part of last week trading session, we witnessed the retest of that structure, and during the early days of this week, we saw a multiple rejection of that level. Another one happened yesterday, followed by another rejection during the early hours of today to emphasize the selling strength of the sellers. The strength of the sellers at this point in time. So as a result of that, I was able to move my stop loss to lock in some profit, and boom, I was taken out a couple of hours ago on this one. So how are you doing on this pair personally from your own end? I hope you are able to take some profit here on the US oil as we see price action continue to trend on the lower side. So at this point in time, what is going to be our plans going into the New York session today? Are we still going to be thinking of buying the US oil, or is there a possibility that we could be having a situation where we might be having um, selling structures that will be sending the bearish signal going forward? So let's quickly run through the higher time frame. Let's quickly have an holistic perspective of what is going on in this market, and let's see if the structures we have on the higher time frame still supports this bullish momentum that we have been anticipating since the beginning of the week. So scaling up into the daily time frame, and let's see what we have here on the daily time frame. Well, looking at the current structure we have here, like I've always explained to you since I think since the time we've been monitoring the US oil as usual, we have this bullish trend line which has been after connecting the series of higher lows here. So we had that bullish trend line which has been holding bullish momentum in the last 2 years for the US oil. So as a result of this, we had that bullish trend line figured out. And then if we zoom into the current structure to if we go to as far as the month of June, we were also able to connect the series of higher lows here, lower highs rather, to give us that bearish trend line, which took price to collapse right back into that bullish trend line in the month of September. And following the collapse into that structure here around the $80 mark, we saw a situation where bullish momentum took over the market one more time to break out of that bearish trend line to give us a bullish signal. However, if we look at the current structure here, we can see that we have a very important key structure at the $86 level, which has been a major determinant of price action in the past. Look at how participants in this market gathered here to buy the US oil during the month of August, though we saw attempt by the buyers to push price to the upside here in the month of September, but this was met with strong resistance from the sellers, which finally pushed price to break down the $86 level, and throughout the month of September, price has continued to trade right below the $86 mark. And what this simply tells us is that, first of all, the first thing it tells us is that the $86 level is a major determinant of price action. And secondly, it tells us that prior to the events of the month of October, price has been on a strong bearish momentum. As we can see throughout the month of September, price was trading right below that level. However, the breakout of the bearish trend line here, which also lines up with the key level at its $6 level, is more or less a bullish signal, and this is as a reflection of the decision of the OPEC Plus to cut oil production, and we saw the reflection on the chart with that bullish engulfing candle taking us right out of that structure 3 to 4 weeks ago. And this was followed by a retracement phase. We can see as soon as price got into the $93 level, we saw bearish momentum, which we actually took advantage of as well. as we saw price climb down, break down the $86 level one more time, come back into the $82 area. And what happened around the $82 area was quite interesting, as we saw a retest of the structure that was broken, which was followed by buying pressure from the $82 level. So it tells us that that level has been a strong buying niche for participants in this market, as every attempt by the sellers to push price right below the $82 level has been met with strong resistance from the buyers. And this eventually led into the breakout of the $86 level, which is more or less a sign that to trade the US oil going into the New York session today, there are two things we want to be looking at. Well, the first thing we want to be looking at is to see what is really going on in this market here. As we can see, we had this engulfing candle taking price right into the $89 level. And since price got into the $89 level, we started seeing selling pressure from that area. So what we want to see is what is going on here. Is this going to turn out to be a trend continuation pattern following this impulsive move? That is, we might be seeing something like a bullish rectangular pattern to incite a trend continuation to the upside. That is the first scenario we want to be looking at. Or we could be having a situation where a reversal pattern happens around this area to send price crashing down into the $86 level one more time. So these are the things we want to be looking at going into the New York session today. So in order to do that, we need to scale down to a much lower time frame to understand what is really going on right around the $89 level. So when we scale down to a much lower time frame, let's say the 1 hour time frame, for instance, here, hold on a second, let me see the 2 hours time frame. Let me see the 2 hours time frame. Okay, so right on the 2 hours time frame, this is what we observe here. So in order to make things more clearer, let's take this all out, as we don't need this anymore. All right, so let me delete this. Should I delete this? Okay, let's still hold this. Let me take this out of that structure. Okay, so we have the scenario here when we are right on the 2 hours time frame now, and what we observed is that we had this bullish momentum that took price right into the $89 level during the course of last week trading session. And since price got into the $89 level, see what has been happening. And this has been happening since last week. We saw selling pressure right from that level. So we saw the first one here, second one here, we had a third one, then we had the fourth one during the course of New York session yesterday, and we had the fourth one during the early hours of today to signify how strong the sellers are at this point in the market. So at this point, are we going to be seeing a scenario where price will be going to the downside, considering the fact that we have this bearish signal coming right from the $89 level? Well, in order to have a better perspective into this, what I want to be doing here is to connect the series of higher lows here to give us a resultant bullish trend line to guide our actions going forward. And I think we are going to be having a couple of lines here to guide our bullish momentum. So the first one is from this level last week. So we have this first scenario here, which I want to, okay, so we have this one. So let's give it an outright line. So we have this one, and then we might be using this one as well as a yardstick for any trading opportunity for today. So we have this temporary bullish trend line, which I will call it for now, and then let's make it a dotted line, a dashed line rather, and we have something like, so let's go back to our line chart. So we have a scenario here where price has continued to respect that bullish trend line since the later part of since mid-month of October. We saw our price has consistently respected that bullish trend line, and the same thing happened during the early days of this week, and we have a scenario where price has been respecting this temporary bullish trend line since the beginning of the week. So what I will be suggesting here is this: considering the current structure we have here, well, the first one is that temporary trend line. So if we are going to see this temporary trend line guide bullish momentum, what I want to be looking forward to is an outright breakout of the $89 level. So if I see an outright breakout of the $89 level, that is, I see an engulfing candle taking out all the sell position that is here, then I want to be seeing that as a bullish signal. But remember, we are not getting too excited at this point, as we want to wait for price action to give us further confirmation which is likely going to come in the form of a retest of either the bullish trend line here or the $89 level, followed by buying pressure on lower time frame. Then we could actually join the trend continuation to the upside. So that is the first scenario I'm looking forward to at this point. Then the second scenario is a situation where we might be having a breakdown of this temporary bullish trend line, which appears to be happening right now, but we can't call this a breakdown yet, as we need to see how this candle running right now is going to close. So if we have a breakdown of that trend line, then we might be seeing a situation where price comes back to do a retest of either the $89 level or the bullish trend line here to start giving us reversal patterns on lower time frame that would probably send price crashing back into that bullish trend line or the key level here to, we never can tell how price is going to relate to that level around this area, that is around the $86 level and the bullish trend line. So we will be having a couple of scenario too to look out for if price comes within that area. So there are two things we might be looking out for at this point. We could be seeing a situation where buying pressure comes out from this level to send price going to the upside. That is the first scenario. And if this bearish trend line, if this bearish move continue to break down the $86 level, retest of structure could send price crashing further to the downside. So what I'll be advising at this point is this: how do we intend to trade this? So if at any point in time we see a breakdown of the trend line, retest of structure followed by selling pressure on lower time frame, if you are a counter trend trader or you love scalping, you could actually take advantage of this potential bearish move that could happen here, that is breakdown retest of that bullish trend line. Then you could actually join. I'm going to be taking that counter trend opportunity. We should be having we should be aiming at somewhere within minimum of 200 to about 300 pips in that scenario. But if you are not a counter trend trader, I will advise that even if we have this breakdown retest of that structure, we'll wait for price for this bearish move to culminate. That is, we want to wait for this bearish move to end before we start looking for another opportunity to buy the US oil. However, if price does not plunge, that is, price does not break down that bullish trend line and price continues to go to the upside, that is respecting this bullish trend line, well, I would be advising that we want to see an outright breakout of that structure first of all to give us that bullish signal. And remember, we are not getting too excited. We want to remain very patient and wait for price action to give us further confirmation in the form of a retest of the structure before we join the trend continuation to the upside. So this is what I'll be looking out for on the US oil for today, and I hope that we'll be on standby to take advantage of any of these opportunities that comes up when price move in the possible simulation I was able to play out. So if you have any question regarding what I just explained so far, feel free to drop in your inquiries in the comment section and let's see how I can be of help in that regard. So I'll be taking the next 10 to 15 seconds to read through the chats and see if there are any questions whatsoever before I move on to the next pair. So let's see what's happening in the comment section. Okay, we already have Steamroller in the house. Good morning. Looking forward to another informative session. Great, sure. I hope I deliver. All right, good morning to you, Steamroller. Thanks for that comment. All right, Mori Asmin is in the house. Good morning. So we have 225. Good morning to you. We have Nani SRJ72. I hope I got that correctly. Good morning to you. Then we have 359 in the house too. Good morning, 359. 330 also. Hello, good morning. How are you doing today? All right. So I am Neil. Who can help me? Of course, all right, you're Neil. You're welcome on board. So what we do here simply is we come here to analyze the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. So that's what we simply do here. And if you have any pair commodity options you want us to look at, feel free to drop it in the comment section and I will try to incorporate it into my plans for today.